Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Wednesday. In today's program, I want to talk about how that happy feeling, sort of semi-happy feeling the market was feeling yesterday, you know, this sort of spoonful of risk appetite has vanished, and how long that has lasted. Plus a couple of other developments affecting the market as well. But before I get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your due diligence, and of course know the risks at hand before entering any trade. With that out of the way, let's get started. So like I said, yesterday, we had a bit of I called it Green Tuesday in the last video on the afternoon I did. And one of the questions was, I had a question asked by viewers saying, how long will the US dollar, because it was having a little bit of a nap yesterday, had its feet up having a cup of tea. How long that would last? I couldn't give you a precise time, but I said it won't last very long. And indeed, it has not lasted very long at all. Because in fact, the King dollar has basically woken up and the market has now gone pop. So we have risk off appetite once again. In fact, the S&P 500 has fell during the US session to the lowest level within 2 years. In fact, this is now the 6th straight session of losses, which is the longest losing streak since February 2020. So it's the longest losing streak since the height of the pandemic. Since the beginning of lockdowns. As well as that, sterling, which had recovered slightly yesterday after the devastating trading days on Friday and Monday, is now back near all-time lows once again. And the reason, one of the main driving reasons for this, of course, is today the IMF has openly criticized the UK government. And this is really big, actually, for the International Monetary Fund to actually openly criticize the UK government. They've actually criticized the proposal for the tax cuts, saying it will increase inequality and will push prices up higher. Now, for an international body to come out and openly criticize an independent government on their fiscal policies is really, really bad. It's not a good thing at all. And bear in mind, the UK is a G7 nation, and to have openly criticism is not good at all. In fact, Bloomberg has estimated that the UK has lost around about 5 billion in asset value since Trust took power. And that is just simply frightening. Simply frightening just to think of that. That is, she's only been, Prime Minister for, say, 2 weeks. I mean, obviously, there was a lot of concern with the leadership contest that something like, she wasn't going to be good value for the markets. But still, that's quite a frightening estimation. And the question is, of course, now, does, the Bank of England needs to act on this? I mean, the euro at the moment is currently trading at 1.0685. And of course, we'll have a look at the markets in a moment. But like I said, they need to act. But is it just them who need to act? Because if they act now, then it would show panic. Okay, they do need to act to give sterling some strength. They are, Hugh Pill yesterday, he said that they will need to be aggressive in the next interest rate decision. But he also said that's in November. I don't know if the market can wait till November, to be honest. That's we're not even in October yet. So that's quite a fair bit away for us to wait for them to act. So it's not just them, though, because I say if they were, though, suddenly do an emergency meeting and an aggressive rate hike like that really suddenly, I think it would show signs of panic. And really what the UK needs at the moment more than anything else is credibility. They need to restore credibility back to the financial markets and their credibility. They really do. So the only way they can really do that, I think, is the Bank of England and the, shambles of the current UK government act together. And how do they act together? What I mean by that, if the UK government decides to push the tax cuts back to further notice, and the Bank of England increases interest rates, only working together could give the credibility back to the financial markets. For the UK is a safe ship once again, but I don't know if they're going to be able to do that. In other news, which is quite worrying as well, which underlines the energy crisis we have in Europe. Denmark and Sweden has reported 2 major leaks on 2 Nord Stream pipelines in the Baltic Sea. And what's worrying about this, and this is why this situation is escalating quite rapidly, is that it signs these leaks are caused by deliberate acts of sabotage. So that's just basically taking the whole situation from 10 to 11 now. That is really, really serious. And it clearly shows now that Europe will not get any more Russian gas for the winter, which is really, really worrying. Lagarde also spoke today to try and give the euro a bit of a boost, has not helped. And she has basically said, we will continue to hike rates in the next several meetings. But the market, to be honest, is not paying attention to that whatsoever. But anyway, let's have a quick look at the market and see how it stands at the moment. Sorry, my throat was a little dry. So here we are. This is the cable. As you can see, it was trying to break 1.08701 yesterday. Couldn't break it. We're now back under 106.72. We are finding a tiny little bit of interest. If I put it on a 30-minute chart here as well, tiny bit of interest. Resistance currently at 1.06939. But as you can see, again, it's back under pressure. It really is. The next sort of level it needs to break to go any further down, if you look again on the daily, is really 1.05536. I think, to be honest, unless we get action from the UK government and Bank of England, it's only a matter of time till we can see that potential level again. Bear in mind as well, we got the UK GDP coming up soon as well, which I'll talk a little bit about in a bit. Euro, remember those bets about it going to 95 when it first went under parity? Again, very much under pressure, 0.95476. If you look at 30 minutes again, you can see really, realistically, the key, like I say, again, we've got the dollar strength across the board. The dollar has really woken up. Look at the dollar yen. Again, like I say, yeah, we've seen dollar strength. Still slightly under that trend line, though. So obviously, around that trend line, there's still clearly some hesitation about trying to reach 145.50 again, because that's when the Bank of Japan intervened last time. But I got a feeling, like I say, many people feel they will push it once again up to that level at some point to see if the BOJ will react. S&P 500. Like I say, 6th straight day of losses, currently trading at 3,614 points. So once again, risk off appetite. And as we can see on a weekly as well, have a look on a weekly. We can see this is the lowest level now, trading around the low levels of February 2020. So not good at all. What else should we look at? Look at the NASDAQ. Like I say, that's also in the red as well, obviously, because we have risk off. Currently trading at 11,124 points. Bitcoin, again, risk off appetite, risk off. So Bitcoin, which is a risky asset, once again. Yes, that is correct as well. That is absolutely correct. It is at the lowest level ever against the US dollar. So like I say, we have pure dollar strength across the board. We really have. It's all woken up again, like I said. But yeah, very good point. It is. Like I say, so yeah, Bitcoin under pressure, currently trading at $18,685. It's a pretty tight range on this one, though, as you can see. Key resistance at 20,000 $355. This is on a daily chart. As you can see, it tried and tested that level yesterday, but it is finding a bit of support at the moment for $18,438. So bouncing off that potential area of interest there. I mean, compared to the other currencies, is favoring a little bit better. Still under pressure because we've got risk off, but as you can see, it's still pretty much range bound at the moment. It's only doing better than the sterling and obviously the euro. Gold. Gold is the same again. We've got dollar strength across the board, and because of obviously high bond yields and anticipation of higher interest rates, really damaging the yellow metal. Currently trading at $1,619 under that key area of $1,667. So yeah, we have, like I say, risk off on the market once again, and like I say, oops, a bit of water. It didn't last very long at all. But what's up next? Something else which could add to our worries. I don't know if it could, but Kapow, that's my nickname for him. Jay Powell is speaking today at 2:15 p.m. UTC. I'm pretty sure he will pretty much say the same, which he's been saying, which is 2% target, aggressive, prepare for pain, and we're committed to our goal of bringing inflation down. So that could, again, put more salt in an already open wound in the market. Other events to happen still to come this week. We have Germany CPI tomorrow. Expectation of that is 9.4%. US GDP on Thursday, which of course, again, tomorrow, which I'll do a watch along. UK GDP. That, I think, is going to be a real barn burner, especially for sterling. And, of course, EU CPI. The market, as it currently stands, we have the FTSE in the red, negative 1.37%. DAX in the red, negative 1.43%. Eurostock 50 in the red, negative 1.22%. So again, like I say, we had a green day yesterday. I called it Green Tuesday. That's all changed. That has all changed. Didn't take long, did it? Didn't last long. But like I say, a little bit of recovery, but now the market's got a gaping open wound once again. Don't forget, you can ask me questions anytime you wish, and simply say hello if you like, or share me your opinions. Don't forget as well, while I'm thinking about it, later this afternoon at 12:30 p.m. UTC, I will be doing my next episode of hashtag Ask James. Those who are new to the series, this series is still broadcasted live, like tixee Live, but instead of being more market driven, it's education driven. We choose a topic, or you choose a topic, send the topic suggestion in to me, and then obviously I will then look at it. I'll take it in, and I'll do a whole video just for that topic for you, just for that topic. So today's episode suggestion has been sent in by a viewer called Train to Trade, and their suggestion has been the RSI, Introduction to the Relative Strength Index. So the hashtag episode of hashtag Ask James today will be Introduction to the RSI, and that's at 12:30 p.m. UTC. So please come and join me for that. Another question here: when is the next ECB interest rate review or decision? It's in October, so in a few weeks' time is the next decision. And really, the market's priced in another 75 basic point rate hike by then, because they have to be aggressive as well, because they've got a lot of catching up to do. Not that I think it will make much difference. It'd be interesting to see what their CPI is, though, on Friday. So, yeah, 75 basic point is going to be in October as their next decision. So don't forget, hashtag Ask James today. So please come along and join me for that. Is there any other questions at all? Anything else anybody would like to ask me? Or say hello. They won't go to 100. I'd seriously doubt it, to be honest. I seriously doubt it. I think they'll do 75. It does depend on, obviously, what that CPI reading is on Friday. If it comes in shocking, then the market might start thinking they might be 100. But I think the only central bank who needs to do something as big as that, or even bigger at the moment, is the Bank of England. They seriously do. And like I say, the market yesterday started pricing in a 200 basic point rate hike by November from the Bank of England. But like I say, yes, can't see the ECB doing 100. 75, yes. And possibly another 75 in November as well. So two sets of 75 in this cycle. A good question. But you never know. You never know. This market has been full of surprises over the last couple of months. Like I said last week when I was doing the watch along for the Bank of England, their interest rate decision last week when they increased interest rates by 50 basis points. Never in my, I said that rate hike was dovish. Never in my lifetime would I ever thought I was saying that a 50 BPS rate hike was dovish, but it is in this market, in this current climate, these times, it is dovish. Okay, if there is no questions, not to worry. If you think of a question later, okay, you can put it in the comment section, either on YouTube and Facebook. I will see them and I will reply to the next time I go live on air, which of course will be later this afternoon at 2 p.m. UTC to cover the US session. But more importantly, I'm back on again at 12:30 p.m. UTC to do the next episode, hashtag Ask James, introduction to the RSI. Anyway, if there is no further questions, like I always say, if you're watching me on Facebook and you enjoyed this little episode, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video, found it interesting and useful, and you've put up with me, my over-the-top enthusiasm for the markets, which I simply cannot help, just give me one of those. It's nice to know that you like what I do. I can see I've got a couple of likes already, which I really, really appreciate. Anyway, till next time, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, there are the risks at hand before entering any trade. Till next time, every single one of you, trade safe.